Hello, everybody. It's your favorite economic commentator here. Let's talk a little bit about Bitcoin. What's it going to do very soon? What's it doing right now? It's at about $10,000, 10,000 US dollars for one Bitcoin. And for the last couple weeks, it's been hovering between the high 9,000s and the high 10,000s. It's not going to do much before Friday. It's going to keep hovering in this range. Why is it? Why am I pretty confident that it's not going to make any big moves before Friday? Because the Jackson Hole meeting is on Friday. We have all eyes on the Federal Reserve Bank. So what is the Jackson Hole meeting? Well, it's pretty important. It is one of the longest standing central banking conferences in the world. It brings together economists, financial market participants, academics, U.S. government representatives, and news media to discuss long-term policy issues of mutual concern. Right? That's from the Federal Reserve Bank of Kansas City. Now, it's held in Jackson Hole, Wyoming. It's a very important federal bank meeting. Why is Bitcoin not going to do anything before then? Because the same reason the stock market's not really going to do anything before then. Everyone's waiting to hear what the Fed chairman has to say. Why does it seem like all markets are writing on what this one guy has to say? Well, they are. So why are they doing that? Because the Federal Reserve Bank sets monetary policy for the U.S. dollar. The U.S. dollar is the reserve currency in the world. Not only that, but other major central banks tend to follow the U.S. dollar, tend to follow the Federal Reserve Bank in their monetary policy as well. If they don't, then bad things happen to them. And as you may also know, if you've been somewhat following the economic situation over the last 20 years in the world, or at least the last 10 years, financial markets and how well they do are almost entirely based on the Federal Reserve Bank and printing money. Why? Because the Federal Reserve Bank prints money and injects it into the financial markets by lending it at low interest rates to big banks. Very little of it actually finds its way into the real economy. Most of it is just bet on derivatives and other things. Some of it finds its way into the economy via mortgages, for example. People pay for their houses, which that money finds its way into the real economy. And car loans and consumer credit, somewhat in terms of student loans, but a large chunk of it is just entirely goes right into the stock market, increasing companies' valuations, and is bet on extremely obscure products like complicated derivatives and things like that. Right? So it's basically financial gambling. That's why financial asset prices have increased and consumer prices have not increased anywhere near as much. It's important to understand the difference between money supply inflation and price inflation. So money supply inflation is when the Fed prints more dollars. Price inflation is when you buy more of something and the price goes up, because when demand goes up and supply stays the same, price is going to increase, right? So what we're seeing is a lot of money supply, we were seeing a lot of money supply inflation from QE, although the Fed has been tightening a bit, so we're not seeing as much. What happened was that financial asset prices, we saw price inflation in financial assets. We didn't see very much price inflation in consumer prices. Now, you might be saying, oh, what are you talking about? Consumer prices rose a ridiculous amount. A head of organic lettuce cost $2, 10 years ago, and now it costs $5. Well, yeah, consumer prices have been increasing, but not anywhere nearly as much as the stock market and home prices and things like that. Haven't been inflating as much as the credit bubble. So here we see money supply inflation directly leading to price inflation in the assets where the money is going. That's important. We'll get back to that later. So talking a little bit more about the Jackson Hole meeting, basically the financial markets are waiting for Jerome Powell to say that he's going to print more money, and if he doesn't say that, they're going to be mad. Now, at the last Fed meeting, the Federal Open Market Committee meeting about a month ago, markets were slightly happy because Chairman Powell said that he was going to lower interest rates. That's the interest rates that they loan money to the banks at. That's basically, injecting money into the economy. So he said he was going to lower interest rates 25 basis points, but then he said that he wasn't saying he was going to keep doing it. He was just doing it this time. So the Fed could still resume tightening after that. Markets got mad and stocks kind of crashed because they were like, no, we want you to say that you're going to keep doing that, right? So back to Bitcoin, I think whether he says he's going to cut rates or whether he says he's not going to cut rates, it doesn't matter at the Jackson Hole meeting. I think either way, Bitcoin's going to go up. Why? Because it doesn't matter what he does. people who are investing in traditional financial markets still kind of have the wool pulled on over their eyes. They still think that the Fed can just keep printing money forever and ever. It doesn't matter what they do. They're all powerful. This is a problem. If you look back throughout history, this has been happening since the Roman Empire. Some company or empire, some country or empire rises to prominence. Their currency becomes dominant. After a few hundred years, the currency fails and they fail. Now, the human lifespan is during that time was like 40 or 50 years, and now it's like 70 or 80 years. People who are born into something like that can never see it ending. So, of course, people who are born into a world of U.S. dollar dominance, they believe wholeheartedly it doesn't matter. The government invents the money. How could they default? How could they fail? They'll just keep printing more money. Because they were born into that, they couldn't possibly ever conceive of it failing. But of course it can fail. It can get to a point where the interest payments on the debt are too great, and the government can't afford it, and it defaults. And yes, there are hard defaults that can happen. There is a hard limit to how much money they can actually print. We obviously haven't reached it yet, but we're getting there. People who don't believe that generally believe in modern monetary theory. We have John Malden from Malden Economics. Recently went to an event that's jokingly called the Shadow Fed by the CNBC. It's basically a fishing trip in Maine, United States, for a lot of rich hedge fund managers and people that are pretty big in the financial world. It's an unofficial event. So we talked with a lot of people at that event. John Malden says, I can't say any stronger. If I see MMT coming, I will reposition my portfolio to heavily weight gold, real estate, and a few biotech companies, right? So gold and real estate are kind of risk assets, especially gold. Gold and silver went up recently. Recently we had Bitcoin, gold, and silver all going up together. Silver has held its gains. Silver is right now at $17.11 per troy ounce. Gold didn't quite hold at 1,700, but it's at 1,500 and it's holding that. They haven't managed to manipulate gold and silver back down yet. This is important because we have all these risk assets rising together. We also have people at this economic forum, a lot of these rich people that he spoke to basically all agreeing that they know that the government can't keep printing money forever. If they see modern monetary theory coming, which is where people believe the dollar will always be king because that's what they are born into, they can just keep printing money forever, nothing will change. If they see that coming, they're going to buy more gold and more Bitcoin and more risk assets. And what is modern monetary theory exactly? It's a macroeconomic theory. Its advocates argue that the government should use fiscal policy to achieve full employment, creating new money to fund government purchases. Of course, this is total bullshit. If the government is using fiscal policy to achieve full employment, that means they're using their money, right, fiscal policy, to employ people. But then it says creating new money to fund government purchases. So they're using, of course, monetary policy to achieve this fiscal policy. So really the government's using monetary policy to achieve full employment. So really what that means is the government is printing more money to achieve full employment, which is not a sustainable way to achieve full employment. A strong economy is a sustainable way. So according to these same advocates, the primary risk is inflation, which can be addressed by raising taxes and issuing bonds to remove excess money from the system. Complete bullshit. You can raise taxes as much as you want. Rich people are just gonna leave. You can issue bonds and do a whole bunch of other magic. It doesn't matter if nobody's buying the bonds because nobody trusts the government because their interest payments on the debt that they've been creating to fund their ridiculous purchases is way too high. Modern monetary theory is not going to work. Modern monetary theory is basically just helicopter money, just endless printing of money. And historically, the government always wanted to refrain from printing too much money because they knew it would result in inflation. Modern monetary theory is a way for academics to say, oh, let's just keep printing forever. It theoretically shouldn't result in that much inflation, and we can control that via this way. And then they're going to do that, and it's going to fail miserably, and they're going to blame it on Donald Trump or conservatives or whoever they want to blame it on. Okay, so we don't want to see modern monetary theory happen. The market wants to hear Powell say that they're going to do modern monetary theory and reduce the interest rate by 100 basis points and keep printing money forever, right? So all those things together is why I think that no matter what they say at the Jackson Hole meeting, Bitcoin's probably going to go up a little bit. Gold and silver probably not going to go up, but they're probably also not going to go down. Anyways, we'll see what happens. That's happening in 2 days on Friday, and Powell is going to speak at 10 a.m., or at least the meeting starting at 10 a.m., and I'm not sure when his remarks will be released, waiting to see how the market reacts. If he doesn't say that he's going to continue lowering interest rates throughout the year, and go back to QE, the stock market is going to be angry and the stock market is going to go down. All right, that's all I have to say on the matter. Comment and subscribe below. Have a nice day.